With less than 2 weeks until the people of Scotland vote in the independence referendum, would an independent Scotland be able to remain in the currency union with the rest of the UK? And if not, what might be the consequences to the Scottish economy?
Well, you know, I went to Edinburgh in January and I gave a speech on this subject, on the economics of currency unions. And basically in that speech I said there are three components of a successful currency union. First, you have to have free movement of capital and labor and goods and services, trade, across the various parts of the currency union. Secondly, you need something called a banking union. In other words, you need the same regulation, the same supervision, same standards in the banking sector, and you very importantly need the institutions that stand behind those banks, the lender of last resort, which is a central bank, deposit guarantee scheme that's credible. You need all those institutions to be common. And thirdly, you need some form of fiscal arrangement. So you need tax revenues and spending flowing across those borders to help equalize to some extent the inevitable fluctuations, differences in the various economies. I think we only have to look across the channel at what happens if you don't have all of those components in place. So that's just the economics of it. That outlines the economics of it. You know, I've said this before, but we take note of the positions of all the major Westminster parties to rule out a currency union between an independent Scotland and the rest of the UK. So it's in that context, just to put it together, in that context, a currency union is incompatible with sovereignty.